I know that you had a great note out on Worth Charting on Friday about Walmart. We focused on it on Fast Money. I guess it was on Thursday, Carter, and it was really about as good as it gets as far as setups, right? As far as banging up against technical resistance in a downtrend, but also, your arrow was pointing down towards the uptrend that had been in place. Again, you're just calling for like a 10, 12% check back to that uptrend. I thought that was really interesting, but it sounds like it got you thinking about retail as a space in general.
That's right. So Walmart, obviously a big name, and in a way, is Target really a competitor? Is Amazon a competitor? Walmart is sort of uniquely, it's the grocery store, right? It's so Costco, but it's also a huge online presence. It's also just the big one. But it's defensive, and it's rallied to a difficult level. And my thinking is you faded here. So it is a minimum. Most people are long anyway. 95% of all capital is long. If you're long, write some calls or trim, take some money off the table. But for those who do sell short, I think you have an opportunity here, whether it's outright or through options, to catch a swoon. This is the Walmart chart from last week, no lines. Let's put some in. Basically that's a well-defined downtrend line. You can put the arrows in to show how precise it is. And what we've got here is, I think, something you bet against and catching it for a downdraft. It's a big move to a difficult level. It's staples that's the lines have to. Does it mean it has to go to the bottom? That's what my eye sees.
Yeah, no, it seems like, and I think you mentioned it with options, and maybe later on this week, I'll detail like a put spread that would kind of outline that range from where it, is banging up against that resistance and possibly on its way back to that uptrend. And, there's probably a way to target something before their earnings. They're going to report in late May. And especially if you kind of, our guys are getting the gist, and gals, of our fundamental bent as far as, or at least the way we're leaning as far as the market over the next few weeks. Carter, I just want to, before we hit to the XRT and the retail ETF, we've seen this pattern, right, over the course of the last, call it, year and a quarter, where we had stocks get oversold into earnings. They've rallied. Maybe they've rallied a little further than some of us would have liked if we've been bearish, but they've gone back and they've retested those prior lows and they've made new lows, right? And so far this year, we have not seen that. I mean, it looked like the S&P was almost down on the year after being up close to 10% at one point in early March. And so, to me, I think we're getting to a point where a lot of news is in the stocks, and if it's not better than expected news, it's likely to see like the sort of trend that we've seen over the last, call it, 12 to 15 months or so, where we kind of go back and at least put a little bit fear back into the market. And so are you of the mindset that you want to kind of pick on some of the weak sectors? Is that why the XRT is something that's kind of catching your eye? Because Walmart, what you just said, is a large component of the retail space. It's acted pretty well, right? It's up, 5.5% on the year, deemed to be a little bit defensive. So throw it in the staple camp, like you said. I'm just curious because retail in general, looking at the XRT, feels a lot weaker, let's say, than a Walmart.
Right. In terms of shorting generally, you either go after extreme strength, something that's overpriced and thinking that it's overdone, or you press weakness, right? Something that's sick, that's going to prospectively get worse. But the XRT is an interesting ETF, of course, because it's equal weight. It's 89 stocks, 2.5 trillion, but no stock has more than 1.65% weight. So it's got Amazon and Walmart and Costco and Home Depot and all every big one, but it's got Gap and Urban Outfitters and Foot Locker and on and on. And look at the chart. One could say, but isn't that bottoming? It's been trying, but it's taking a little too long. Let's put some lines in. So now one could say, okay, here come the lines. That's in your eye. Fair enough. Let's do it and pull it back and do a little bit longer term. And so the question is, and we're going to get to the relative next, does this just continue to muddle along the bottom, or is there downside risk? I think it breaks. Let's keep going with the charts and see what we find next. So I've got an arrow in there. It says we're sellers, but look also at the next iteration. And this is important. If you extend the trend line from the COVID low, we're at risk of breaching that trend line. It's also not random that the February strength, look at the next chart, the February rally went right to the August high. How precise? Take a look at these numbers. I mean, this is incredible, right? $75.78, $75.77. We got right to the, and of course we know this, that the market's February 2nd high is nowhere near its August high, but the XRT got literally to the penny and failed. You have the elements of a double top. But the relative is what's really, and we can see that in the next several charts. If you look at the relative performance, and so now it's the same chart on the top XRT, but now look at relative performance to the S&P. If we go through the next several charts, you'll see. So the XRT is actually fairly comfortably above its autumn low.
Mhm.
We're about to make new relative lows to the S&P. And this is the issue. I mean, the consumer, yes, there are restaurant stocks that are up and there's certain individual stocks that are up, but this is a broad basket of stocks with 2.6 trillion in market cap, and it's not so good. Look at the next, if we have another, and then we can zero in and make this really tight, the here and now chart. And the final chart is basically you're looking at a two-panel chart, XRT on the top, and you're looking at the XRT's relative performance, simply a ratio of it to the S&P on the bottom. We're at risk of breaching right now to new 52-week lows. It's not a great setup.
Yeah, no, that's a great run through there, and we're going to look at some trade ideas in the space over the next couple of weeks. On the tape with Liz Young this morning, we talked about some of the consumer data that appears to be weakening too, and that seems to be a good setup for some of these retail names to the downside here.